panelists. Thank you for being a part of this. And as Gary had mentioned earlier, I have this very fancy iPad here that you can use the QR code to send questions in so that we can participate together. But we're going to start with introducing our folks here up on the panel. You can also see much longer bios on each of them through the larger program. But down to my far right is Mr. Fred Payne, President and CEO of United Way of Central Indiana. I've been doing that since 2022. Since 2022.
Yes, since 2022.
Since joining United Way, Fred has led the strategic planning effort to help distance 10,000 households from poverty in central Indiana over the next 5 years. Welcome, Fred. Thank you, sir. Stephanie Quick is just down from Fred and serves as the president of Intend Indiana, where she ensures the organization's mission of connecting people to opportunity and advancing collaborative community development through equitable financing and housing solutions. Stephanie has worked in all facets of the real estate development for nonprofit and private and government agencies with a focus on development, construction, and affordable housing. And then we have Shelley Specchio next to her, CEO of MyBor, Association of the Broker Listing Cooperative, professional association that represents Central Indiana's realtors. Together with leadership, Shelley had her MyBor team focus on issues most practical and impactful to their members' businesses, homeownership, and the efficiency of the real estate market. Thank you. And then to my right, Mr. Brian Stump is the Community Development Studio Lead at HWC Engineering, working with communities to create clear and accessible ordinance that foster sustainable development. He's passionate about creating communities that people love, using his unique blend of expertise as a certified planner, registered landscape architect, and a licensed real estate broker. Welcome, all of you. Thank you for participating in this. While I have this fancy tool here, and I'll engage you all in, I went old school on paper with some questions to get us started. I think I'll start with you, Mr. Fred.
Okay.
So Alice, the asset limited income constrained employed, is something you all have done a great job of highlighting. I'm curious just around housing stability and the role that it's playing now that's maybe challenging those individuals and families.
Yeah. So as Jim mentioned, when we talk about Alice, we talk about the asset limited income constrained but employed individuals. So what does that really mean? That really means individuals who are making more than the federal poverty level, they're making above that, but not enough to take care of their basic needs on a day-to-day basis. In short, it's people who are working, but they're not making ends meet. And in central Indiana, according to our latest study, which was in 2024, there are about 257,000 people who are either Alice or in poverty. One of the things that we talk about quite often is Alice. It sounds like a name. One of the reasons it sounds like a name is because behind every single data point, there is a person. So as we talk about data this morning, I want you to put yourself in the mindset of that data point is a person. And when we talk about home ownership and stability, when it comes to this Alice and poverty population, we're talking about a population that's extremely stressed and that's spending most or all of their income just on housing. So there isn't very much to spend on other things. If a person is spending at least 30% of their income, more than 30% of their income on rent or housing and utilities, we consider that person to be a cost burden. But if they're spending more than 50%, then they're extremely cost burden. Remember that number I said, 257,000 in central Indiana. That's the number of cost or extremely cost burden people that we have in central Indiana. And so when we talk about home ownership and we talk about the pathway to it, there's a long pathway. And when you think about I-69, I know a lot of people in this room are probably cringing about you know, the construction of I-69 all the way down south. But when we think about the pathway to home ownership for some people in our neighborhoods, it's just as long as I-69. It's complicated. There are some construction pieces along the way. There are some areas that you want to avoid. But we have organizations like Habitat and a lot of other organizations that are doing a very good job in helping to steer people to their destination of home ownership. So just to kind of put a point on it, and then I'll move on with your first question. The Alice population is a population that we want to continue to help provide you know, some type of input, some type of guidance, some type of support to help them move to the next level. Our goal at United Way of Central Indiana is to help people live the lives they're capable of living. Home ownership is one of those ways.
Yeah, thanks, Fred. Stephanie, you and Intend are, when we build off of Fred's conversation around need like that, you got a partnership up in South Bend that you all have been working on. What are some of the things in that partnership that you see working that you could share around that?
Absolutely. Thank you, Jim. With the city of South Bend, I have to start by saying that we've never seen a partnership quite like this. And by that, we mean that they get it, they know what their priorities are, and they seek out community partners to help them move their mission and their priorities forward. They look for ways to make it happen. Whenever we have a question or issue, something that they may not have experienced before, they take a little bit of time, not much, but they make it happen. Some of the things that definitely work for us, they, of course, provided us with incentives for a multi-year development where we'll be building up to 100 homes over the next 5 years in the Lincoln Park neighborhood in South Bend. And with that, we did partner on a $5 million forgivable loan, which will help us with that development gap for towards the construction cost. Also in South Bend, which is not, oh, I'm sorry, I'm gonna back up. They also provided us with vacant lots. So at Intend Indiana, we provide some land banking services where we go into a city or town and we assist them with prioritizing how they want to use their vacant lots. So we had those conversations with the city of South Bend. Again, they already knew what their priorities are. They just wanted to move it forward. So starting with the vacant lots that they're providing for the construction of those up to 100 homes. And those homes will be a mix of incomes, which is also very important when we're thinking about comprehensive community development. So it would be everything from low income, so 80% AMI and below, to workforce housing, 81 to 120, as well as market rate housing. But even aside from that, even aside from the direct incentives provided specifically for that project, in the city of South Bend, they've also created their own set of pre-approved building plans. So as they've described it, they've had a number of developers come to the city of South Bend, not necessarily taking into consideration the existing housing stock or the historic housing stock in the neighborhood. They were having long conversations in regards to no, that doesn't fit with this neighborhood, or no for whatever other reason. So they developed their own pre-approved set of building plans. And this is everything from one-bedroom homes to quadplexes for rental, for home ownership, whatever the case may be. So really taking into consideration what Shane mentioned earlier, not just what the need is now, but thinking about the future, thinking about the diversity in a particular community and what that community wants in regards to housing. So that was definitely a benefit for Intend as well as any other developer, knowing that you can go in and literally choose which homes you plan to develop based on their pre-approved plans. They also have a sewer lateral reimbursement plan, which as we all know who are in this space, that can be very costly. So they provide up to $20,000 per lot in reimbursement for sewer lateral connections. That's huge. As the price of housing, the price to construct housing continues to grow, and we're thinking about a neighborhood that may not, on a particular lot, there may not have been a home there for a number of years, and those replacements are needed. That goes a long way in regards to the cost of building that home. The last thing I'll say is it's the partnership in general. There's nothing like partnering with a community or even another community-based organization and out the gate being on the same page, sharing a shared vision, knowing and having a full understanding of what that community wants and being able to move that forward in a very expeditious manner.
Yeah, so that comprehensive nature that Shane talks about, right? How do you put it all together?
Yes.
We were talking a little bit about during breakfast that it's a longer term. Nobody is looking at it the next day. This takes a while to think through. Shelley, I know I was reading that Zillow proclaimed Indy as the second hottest housing market in the country. They based that on home value growth, projected change in owner-occupied households, job growth, speed. So when we hear that, it's sort of counter to what we're talking about. We have this need for even affordability. So how do you see that when those things are promoted like that in balance with what's going on in our market here in the Central region?
Yeah, it's always fun to make a list, right? It's always fun to see, especially when you love your city, and so you see, oh, Indy, everybody's seeing how great our city is. But that particular list, yeah, it could be some problems for first-time home buyers for sure. It maybe isn't certainly it makes things a little bit challenging. But we do want to, it's again, like what Shane was saying, we want to attract people to our city. We just need to make sure that we're providing the right supply of what's available for people to purchase. The ongoing shortage of housing supply has been really the story now for a number of years. And part of what my board's been trying to help with is to make sure everyone understands that it's not just that we've been underbuilding units, it's that we've been underbuilding in the type of units as well. So just as Stephanie was saying, it's so great to hear how well South Bend's thinking this through. If the only plans that builders can get through are the sort of traditional home of 1950s, that's just not meeting the needs of our communities at this point. And so we want to see more supply, but we want to see the right types of supply coming into the marketplace too. All different things, all different styles, which I think will really, really help move. And then maybe we'll make Zillow's best list because we have the best supply of housing, and that would be even better.
Yeah, the most available, right?
The most available.
Well, Brian, building on that to get more supply, I know a quote was, the most obvious way that states and localities can address housing needs is through zoning and land use policies, according to the Urban Institute Housing Finance Policy Center. How do we do that? What's the path to that?
I would agree with that. So just a quick summary. I got to where I am now started out doing design and then went into land development directly and then into working with ordinances. And what we see in ordinances is a lot of, we'll be gracious, there was well-intended policy that ends up being very counterproductive to what your communities are trying to achieve. And so what we were seeing in our ordinances is, the good news is because we've hit such a crucial point here in housing, it's now getting attention. It was really easy to push it off to the side and we're not going to worry about residential. All of a sudden we're seeing more and more focus on that. When we look at a community and seek to address its housing concerns, we begin to identify the different types of housing, because as you mentioned, so often it's your traditional single-family home or apartments, and there's nothing else that's discussed. So we talk about all the different types of housing design styles. The other part too is sort of educating communities, looking at their demographics. As a friend of mine said, preferences can change, but demographics don't, as far as they don't lie. We're all getting older. There's always a different type of, there's a different need for housing. And so to be able to bring that awareness of the different types of homes that are necessary rather than just a traditional house, and then to be able to put those into an ordinance that begins to make those legal and by right, and being able to meet those different demands to help boost the supply. What we're really dealing with here at the end of the day is a supply issue right now.
Yeah.
And so how do we address that supply by both encouraging that housing, and it's something that goes all the way through the supply chain.
Yeah, a question from audience member. What are some gentle density, I love the phrase, gentle density strategies that we could pursue in and around the region to alleviate some of that shortage?
Yeah, and this is a great term of gentle density. We do, in our ordinances, begin to overlap and make that sort of fine difference between single-family homes, duplexes, triplexes, quads, small apartment buildings, and so forth, so that you can, in the right location, begin to introduce those additional units. And it's a way that, at the end of the day, it's funny, we all freak out about density here in Indiana. I grew up in Los Angeles, and it's just a different sense of density. I have to laugh because we go down to Florida. We did a project down in the Cocoa Beach area. Their base zoning is 15 units per acre. People up here freak out about that. You down there, beautiful, quiet streets, walkable community, it's great. And so to help understand that design is more important than density, and being able to allow those additional units in there where they fit is a great boon to the community.
Freak out.
Yeah,
Yeah,
that's what happened.
Technical term.
yeah.
It is.
And we didn't plan the California connection. That was not a
Yeah.
thing. But Fred, I love how you mentioned, because we all pay attention to the data. We understand its implications, but it's people. It's the stories like Priyanka. Where do you see in United Way's efforts around housing some of the barriers that you're seeing the folks experience?
Sure. That's a pretty broad question.
It is, I know.
So I think you did that on purpose. And the answer is pretty broad too, because the way that we help people, there's a wide spectrum. But one of the most important and long-lasting ways that we try to help people is to ensure that he or she or that family has the stability and they have the credentials, and I'm going to define this credential word in a second here, to ensure that they're able to get access. So when we talk about barriers, one of the biggest barriers when we talk about home ownership and even leasing an apartment is a credit score. We all know that credit score pretty much opens the door or it closes the door for a person. So one of the ways that we're trying to ensure that we're working with people in our community is to ensure that they are financial resources and a lot of educational things in place to make sure that individuals have the right credit score, that they're improving their credit score, and when it comes to financial literacy, they're engaged in that. So for example, we have what we call the Centers for Working Families. The name sounds like there's a place out on such and such side of town, but really it is a bundled approach to when it comes to jobs, when it comes to financial literacy, to help an individual along their journey. And the individuals who have engaged with our Centers for Working Families model, they have seen increase in credit scores, and they've also seen increase in household income. And when we talk specifically about household income, they've seen somewhere around a $15,000 increase in household income. So when we talk about barriers, there are two big ones that I see when it comes to stability and getting either home ownership or having a place to stay that may not be your home that you're purchasing, but you're on your way to it. One is that credit score. The other one is making sure that you have the financial resources to sustain where you are now, because you build on that. That is why the Centers for Working Families is so critical for us. There are about 13 sites around central Indiana, and we're trying to expand into each one of the 7 counties. So credit scores, increasing a person's income. Those are a few of the barriers. But the other big barrier, and we'll probably talk about this a little bit later, and some have talked about it already, it's the supply side of things. It's really the access to it, and having the information that you need to open that proverbial door to access to having a place that you can call your own, and you can ensure that your children have some stability so that they know that when they go to school, that they're going to come back to a place that they feel comfortable in, they can study in. How many of you have been to a place, let's say a hotel room, that you knew that you were only going to be in for maybe a night? How comfortable did you get? You're only as comfortable as the amount of time you know you're going to be in that place.
Yeah.
And so if you're in this cycle of continuously moving and you don't have a permanent residence, what happens is you end up not bringing your full self to work. You're not bringing your full self to any conversation that you have or any relationship that you have, whether it's personal or professional. So ensuring that people have some type of stability is very important. And I think access to housing, whether it's on the rental market or whether it's purchasing, that's critical too.
Yeah, definitely critical. I know, so it's obviously tax day. We'd be remiss not to remind everyone of that. And a little plug, we do have an affordable tax credit for those who would like to donate. You can get a tax credit. Sorry, shameless plug. But so it is also State House time. Shelley, I'll direct this one at you. We had another person from the audience kind of mix in just talking about, are there anything policy-wise that you're paying attention to at the state level as they wrap up towards the end of this month that you feel like are either positive or it might be a negative?
Well, there's a number of bills, of course, that we're all watching. I think obviously property taxes has been something that's been in the news a lot. At my board, because we're a local organization, we have a state association of realtors that gets to really fight the fights at the State House on our behalf. So that's good news for me, is I don't have to be down there with the legislator all the time. But we're hopeful that they're going to renew the what was it, residential infrastructure assistance, because as you were saying, infrastructure is such a huge cost that goes there. And really, just anything that will address those rising costs, I think, will be very helpful. Anything that will encourage building. So I'll switch it a little bit and say we really need to, for our perspective, it's the zoning conversations that happen at the local level that really can move the needle for some of our housing issues. So what we would like to see from the state level at the legislation is nothing that would get in the way of that. That we can help the local decision makers, the local zoning, the planning departments, I'm sure people in this room, to be able to make those good choices that help us get more supply built, different product, everything that we're talking about up here to help get those in.
Yeah, there's a kind of to build on that, it sounds like more is the theme and more accessibility to the more. Brian, I know there was a question in from the audience as well, but does higher occupant density help in mitigation of supply shortages in the space?
Yeah, and part of it, I think the short answer, yes. It's a matter of understanding the different types of housing and how they work together and making sure what you do to create a vibrant community and bringing those components together. So it is supply across the board, removing those barriers in zoning. When we're working in an ordinance, it's crazy the stuff that we see in the ordinances. And it's like, well, why is this here? So we always challenge our clients as we're helping them update their ordinance. What is the problem you're trying to address? What is, and does that rise to such a level that there's a compelling governmental interest in getting involved and beginning to make these rules? We see stuff, and because often it's not any one particular rule. That'd be real easy to take care of if it was one thing that was causing problems. The issue is it's sort of this death by 1,000 nicks. Yeah. And it's like, oh, well, this little thing here and this little thing, and all of a sudden I have to go get this approval. And all these little things that make it difficult to get approvals or take time for approvals. And so being able to allow different types of housing and then removing those barriers to getting your approvals and being able to do the work on the site is important.
Yeah, and when you shared, Stephanie, about that partnership in South Bend, Brian's talking barriers. What are some of the barriers you see in the work that you're doing across the state, though?
Absolutely. I'll end with supply. Supply is definitely is definitely a barrier, but also there's a barrier even to affordable financing.
Yeah.
So especially in the changing times that we're in right now, and lending partners, financial institutions are looking at making changes. There was already a strain, especially for low-income home buyers, to not only have access to an affordable home for home ownership, but a home is only as affordable as the mortgage itself. At Indy, Indiana, we strongly believe that that's the key to affordability. Even in today's times, many of us who work for community-based organizations, and we're receiving those subsidies on the construction side. Oftentimes, we may be selling a home for $175,000, a home that cost over $300,000 to build, but we're able to receive some of those subsidies. What we're seeing is that with interest rates where they are today with traditional lenders, mid-6, low 7s, that's not going to be an affordable mortgage for a low-income home buyer. So in Indiana, on the lending side of our house, we're always looking for ways to continue to make that mortgage affordable, be it with the first mortgage product of our own, or be it with some other product to help alleviate some of that cost. It's some barriers that we're also seeing, as well as that access to other assistance, other down payment assistance. Those are true barriers that we see to affordable home ownership. The other is, when it comes to affordable home ownership, definitely having the choice of where you want to live. We were talking earlier in regards to school systems, wanting to be near a school, wanting to be near your employer, and just having the ability to choose where you want to be. Again, as we're developing homes, we can build wherever we want to, essentially, but for someone to come to us and say, well, that's great, I like that neighborhood, but I live here, I live on the northwest side, how can you assist me? So it takes me back to that affordable mortgage product, and being able to provide those home buyers with that opportunity to live where they want and have an affordable mortgage without being told that they can only live in any one particular area.
Yeah, so that theme again of sort of a comprehensive approach to it all is important. I know we've talked about supply, Shelley. There's naturally occurring affordable housing, obviously, too, that we showed. I know I saw the statistic that we've had a 59% increase in median sales price since 2020, which actually bested our Midwest region of states. So what do you see in that space as we're, as hearing from Stephanie, there's how do we get it financed, but also the interest rates and the things that are competing against?
Right, yeah, the median price for the region overall right now is $305,000. I've lived in Indiana for 8 years. When I came here, it was $149,000.
Right.
So I can really track that steep. Now, if you're a homeowner and now you have so much equity, I'm going to take all the credit. It's because I moved to Indiana. But it makes it much harder for affordable housing, the whole conversation about affordable housing, of course. I think one of the things that we'd like to see is the ability for people to stay in their homes so that they are not so attractive for flippers or for investment. And we were talking about this even at breakfast. We'd like to see more opportunities for people to be able to get repair loans. And I know there are lots of products that you guys have. I'd love to hear even more, because if we can have people repair their home, stay in their home for as long as they want to stay in it, and then sell it to the next buyer who could then live in that home, there just isn't that opportunity now for the move-up buyer. There used to be first-time home buyer type houses, and then you would get a family and more kids, and you need more room for your dog, and you'd move up to that next product, and then you'd send your kids off to college and downsize into the next product. And
Yeah.
there just isn't that ability right now. A lot of people have to start their first home buying experience is actually skip a step up to that higher priced home. They have to wait longer, et cetera. So I think if we can, so we need to deal with the product that we have a little bit so that we don't have to do as much infill of new product that ends up being attractive to investors. There's always a lot of conversation about investors coming into our markets.
Sure.
It's a big conversation. It's a big issue. It's down a little bit right now because capital markets are, there's other more attractive places for hedge funds to put their money than just real estate right now. But it's still something we want to keep our eyes on, and we want to make sure that we're wise in how we deal with those, and also just really keeping people in their homes and letting the natural order, the natural move up process that has been such a great way to build wealth for generations to continue to occur in this marketplace.
Yeah, and I know it's kind of a tell of some of the expertise in the room, but zoning seems to keep coming up in the questions, Brian. So you're, yeah, but kind of around a multi-product or mixed use socioeconomically. Is that a way within zoning that can be attractive to seeing growth and affordability?
Yes, and and again, our focus tends to be on removing barriers and allowing, I'm very much a free market guy. And so how do we remove the barriers that are keeping some of what we had as first-time homebuyers or first-time homebuyer options and putting those in the marketplace? I will give a shout out to Lebanon, Indiana here, my hometown to a certain extent. But we did a couple developments in Lebanon. So my wife and I have we're like, okay, how do we do affordable housing that's market rate? I've never dabbled in the government finance game, things of that nature. And credit to my wife Laney on identifying a product type. So we did some narrow lot homes. And when they first, those lots became available when the home builder came in and was building those, we were actually at, and this is without any subsidy anywhere, the homes were $205,000 to $230,000. Brand new 3-bedroom, 2-bath homes, about 1,400 to 1,800 square feet. It's like, it can be done. Unfortunately, going back to your investor came in, bought up all 54 lots and all the homes. And so they're now rentals that are at 22, let's see, they're substantial in their price. I was a little shocked at what they are getting. But to Lebanon's credit, because of their willingness to do that, the other project that we're doing there is a bungalow courtyard. Harking back to my roots. Yeah. But having small, and frankly, my mother-in-law was the target audience for that. How do we have these nice, cute little one-story homes that are on a courtyard that my experience has been people look out for each other, there's a great sense of community. And so that was approved. Lebanon, because of our kind of willingness to think outside the box and do things, and I give credit to the city for pushing us and giving us that room to do that, they actually hired us to update their zoning ordinance. And we've done things in that ordinance that, it was interesting, the ordinance was approved a couple of years ago. We got rid of, we still have residential districts, we regulate by density, but when it comes, and we mix products, so you have different product types in the different districts, so trying to have as fine-grained a mix as possible by right. They got rid of minimum lot size. There's no minimum lot size. If you're in Lebanon, in a residential district, there are setbacks, and there's a minimum building size, which is pretty modest, and that's really it. And their whole thing is, great, if this is your density level and you can have so many homes on the property, show us something. Show us something exciting. We don't want oceans of sameness for a subdivision. We want to see a mix of products. We want to see things happen. And it's been very exciting to see that. Yeah,
I think what I love talking with Brian about is he says zoning is interesting. It's fun. And it's fun. He makes it fun. Well, I think we could probably keep talking for quite some time. We're coming to a close. And can we thank our panelists for their participation?